This is Sonny Hildebrand of Hildebrand Realty, and this is just a quick update on the real estate market in the Portland metropolitan area. I'm going to try to keep this fairly concise, 10-15 minutes. Give me a call if you want to discuss any specific areas or your specific need. This is August 2022's numbers. I will have September's numbers in early October, probably between about the 8th and the 10th. So look for an update. I will try to get that out as soon as I can. Pending sales continue to be below average, lowest August for 10 years. I'm only showing 4 years here, but we have not had an August with this few pending sales since 2012. That was also true for July and I believe June. So pending sales are down significantly and they remain down. Closed sales moved up slightly from July, but do keep in mind that these are the lowest closed sales for the month of July and August that we've had again in 10 years. So lowest number of closed sales since 2012 when we were first starting to come back out of the crash of 2008. Inventory in months is up more than double in the last 3 months. It did tick down slightly from July, and it's still very low historically. It's nowhere near the 4 to 6 months we would consider a balanced market, but it did climb pretty significantly. However, with the really low numbers of pending and closed sales, I would have expected this to actually be much higher. And this I believe to be the primary reason that the inventory has not come up as much as I would have expected it to. The number of new listings has fallen significantly. I suspect that this has a lot to do with interest rates rising and sellers thinking, okay, maybe now it's not a good time to sell. However, I don't see interest rates falling again with the inflation numbers where they are. So we may see this number increase rapidly. That is the real question. Will sellers come to the market if values should fall, or if they determine that the market is under some kind of distress, or the new listing is going to stay really low as sellers are reluctant to sell because they'd have to replace the house at the higher interest rates. Only time will tell. That brings us to the active listings total number, and you can see it's higher than it has been in the last couple of years, but it's still quite a bit below 2019 levels before we entered into the COVID lockdowns. We will have to wait and see what happens here, but things are seeming to sell a lot slower, and I think that this will continue to rise, which means that buyers will have a lot more choices. I think that and the downward pressure on prices from interest rate will probably cause this number to continue to rise. And here's that days on market number. Now this is still very low historically, but that's a 50% increase in 2 months. It has risen very sharply. I expect it will continue to rise just off my own anecdotal experience and what I'm seeing. Also keep in mind that these, like many of the other numbers we're looking at, are backward looking. So these are based off sales that were entered into in June, July, but closed in August. And as you can see here, the average sales price for the Portland metropolitan area as a whole is declining. Still above previous years, but it's down more than 6% in 3 months. And once again, keep in mind that the deals that closed in August were a month to a month and a half old. So September's numbers will reflect things that were entered into in July and August. So I anticipate that this will continue to drop on average. That is very hard to say. Interest rates did tick down a little bit, but then they've risen back up. So we'll discuss that a little later. But I do see an overwhelming decline. We'll get into specific areas here next. Almost every area in the Portland metro market has declined for the month of August from previous highs. I'm going to start on the east side and we'll just discuss area by area. First up is North Portland. North Portland officially fell below last August's numbers. Last August, the average sales price was $501,600. For 2022, that average is $501,200. So Not a lot, but they are down approximately 11% from May, and pretty much all the gains for 2022 are gone. And for the month of August, the average sales price in North Portland was right where it was a year ago. Northeast Portland is still above last year, but it has lost almost 6% since its peak 3 months ago. Southeast Portland also holding on to a gain from last year, but just barely, and they're down almost 14% since the peak in May. Gresham, Troutdale down about 2% from July, but still up 4% from last year. However, earlier in the year, it was up almost 16% from its 2021 numbers. Milwaukee Clackamas is down almost 9% from July, so in a single month. They are 2% below August of 2021's numbers, so it is officially, on average, cheaper to buy in Milwaukee Clackamas than it was 1 year ago. Oregon City Canby has had an approximate $50,000 drop in their average just from June. That's down about 8% in 2 months. So 642, 300, like a lot of these areas, was a record, but it has declined steadily since then. West Portland seems to be doing quite well. You'll notice in February and March they did drop below 2021 numbers, but they did shoot way up to a new record of 818 in April. Since then, they fell about 5% to high sevens, and they've been kind of holding that for about 4 months in a row. So it'll be interesting to see if they're able to hold that, or if, like a lot of the other areas, they begin to rather decline. Beaverton is another example of rising up to a new record, peaking in May, and then a very, very significant decline. They've come down about 70,000, almost 12% from their record high in May. They're averaging a drop of about 4% a month right now. Lake Oswego and West Lynn, still very noisy numbers. Some pretty drastic swings on this statistical average. They are almost 8% down from last month. However, that does still have them 8% over where they were last August. Northwest Washington County, like so many more, is continuing to fall. They are down a little over 110,000 since May. Translates to about 13% of values. They are still over last year, but barely. Like Lake Oswego, West Lynn, Hillsborough, Forest Grove has some noisy numbers. We're getting some really high peaks and then valleys, and then peaks and then valleys. So a lot of noise on this one. It is an almost 9% drop in August from July, but really it's just kind of right in line with where it was in April. And it's still 6% over last year. But as an example, at one point this year, it was 20% over 2021. That would have been the May's numbers. Tigard Wilsonville. Now, this is the only metro area that had an increase in average sales price for the month of August. It is a new record. You'll also notice that it didn't peak in April or May like most areas did. It kind of had a steady climb, dropped a little bit, and then shot way up. My suspicion here is this mostly has to do with a lot of new construction coming out on the market in the Wilsonville area, but that is speculation on my part. I'll continue to watch this number, though. Yamhill County fell 10% from July. It is now 11% below August of 2021. So a tremendous fall. I suspect this also has something to do with new construction. My theory is that a lot of the new developments were sold out or there's no more inventory there, and so a higher percentage of the sales were resales versus new construction. But I'd have to look a little deeper into those numbers to verify that. Columbia County is down almost 9% from the previous month. However, they are still up 6% from last year. If you're noticing the large anomaly there in February, that was due to a single large sale. Columbia County obviously doesn't have the number of sales that some of the other areas do, so one very sizable sale can skew that statistical average dramatically. That particular sale was a working farm and ranch, over 2,000 acres on the Columbia River. It sold for just shy of $13 million, and that one sale alone skewed the numbers that dramatically. Mount Hood, 24.5% drop from July. 7% drop from last August. So it's 7% cheaper on average to buy in Mount Hood than it was a year ago. This is the first time it's been below 500,000 for average since last year. It peaked in January at 813,000, but I suspect an anomalous sale like the one we just discussed in Columbia County. I haven't dug into it to find it, but usually when you see that big of a swing, there is either one or a small handful of extremely large sales, multi-million-dollar sales. And since you don't have the number of sales that you would in the more urban areas, it can have a disproportional effect. This is the average 30-year fixed mortgage rate. You can see that since January, it's risen from the low threes, now pushing about 6.5. It did, you'll notice, kind of begin to drop in July and August, and then it began to rise again into early September. I think you might see in next month's data a little bit of a bump up in that regard, because I think as it got back down into the 5% range, I think there were a few people who jumped back in really quick to try to buy before they rose again. So it'll be interesting to see, but as you can see, the 30-year mortgage rate has risen significantly, pretty much doubled in just a handful of months. This is the consumer inflation. This is a 20-year period of time, but you can see in the last year, year and a half, it has spiked to record levels, levels we haven't seen in, well, 40, 50 years. This is the reason why the rates are going up. This is the reason why the Fed is increasing the Fed fund rate, which is affecting Treasury yields, which is affecting mortgage interest rates. And this is what they're trying to combat, is the runaway inflation to the consumers, which can put a big, big dent in a household's budget. So it's something that they have to do. It's something that I think they will continue to do for some time, and they are certainly signaling that they will do. I'm not so sure, even if they reverse course like they did in late 2018, I'm not so sure it would have the desired effect. I think that the budgets are already upside down, and I think confidence is waning. So, but just to kind of understand the supply-demand side of it, they are really, really trying to slow down the demand because the supply just can't keep up. This is a little bit more of a deep dive into those inflation numbers, because there's always a lot of disagreement over, I heard this number, I heard that number, and how that's broken down. Now, what you see here is all item inflation, which is at about 8.3%. Food is at 11.4%. Energy, believe it or not, is a 23.8% 12-month increase for August of 2022. And then all items, if you minus food and energy, this is the number you hear about the most often, is 6.3%. But I don't know anybody that doesn't require food or energy. So keep that in mind. So that about wraps it up for August of 2022. I will have September's numbers probably the second week of October. They usually get published somewhere between the 8th and the 10th. It takes a day or two to process. So look for them the week of the 10th in October. It will be very, very interesting to see how September's numbers come out. Anyways, if you have any questions or need anything, don't hesitate to give me a call.